Where will mortgage rates be at the end of this year, in 2024 and in 2025? You're definitely going to want to watch this one. Mortgage rates, inventory, this is all that people are talking about right now. And I went and did some research and I found 8 different experts, whether it's the Mortgage Bankers Association, Morgan Stanley, I'll list them all here, and where they're predicting mortgage rates by the end of 2023, as well as 2024, and in some cases, 2025. Before I get there, let me share some key data with you that's letting us know how the fall housing market is going to be shaping up. Where we are sitting right now in terms of total number of homes for sale in the US is 492,140 homes as of the end of last week. And to give you some perspective, this time last year, the same week last year, we saw 550,175 homes listed for sale. Now, obviously the number is less given that there's 30 to 40% less sales in various parts of the country. The supply of homes has climbed. Homes are taking a little longer to sell. They're sitting on the market. We're seeing things get accepted like home sale contingencies, believe it or not, home inspections, normal terms that became the outlier in 2020 to 2022. So we're starting to see that the market is going back to the summer and fall seasonal flow that a lot of us are used to pre-2020. And the total worth of homes in the US just climbed to its highest level ever at $46.8 trillion. This is the highest number we've ever seen as long as they've been charting that stat. And because of all this, we're seeing low inventory, rates are coming in the low 7s right now, and we've got this peak number that home values are coming in at. We have something that's called the lock-in effect because rates are in the low 7s, like I said. A lot of people talk about this, specifically Lance Lambert at Fortune magazine, and what he talks about is that because there's 90% of home sellers or homeowners have a 6% or less rate on their property, they feel locked in and they don't want to make a move because a lot of these people have a 3, a 4, a 5, and until rates come down a little bit, we might be dealing with more of this lock-in effect. And that's going to be this grind with inventory. It's difficult to find homes. There's a lot of competition. These are just the facts of the market. We're helping people buy and sell all the time, so it absolutely can be done. It's just a little more challenging to navigate, and you've got to know what you're getting into. So let's future pace this a little bit. What's going to be happening moving forward? So here are the 8 predictions about mortgage rates. And then I'll give you my prediction. We'll talk about what it means. Mortgage Bankers Association predicts rates to come down to 5.9% by the end of this year and 4.9% by Q4 of 2024. Morningstar is predicting 6.25% by the end of 2023, 5% in 2024, and 4% in 2025. Goldman Sachs, 6.4% at the end of this year and 5.9% as the average mortgage rate in 2024 when you factor in all the fluctuations. The National Association of Realtors is predicting 6.4% and dropping to 6% next year in 2024. Morgan Stanley is seeing 6% rates in 2024. Moody's is predicting 6.5% by the end of the year, 6% in 2024, and 5% in 2025. Realtor.com is predicting 6.1% in 2024, and Fannie Mae is predicting 6.6%, dropping to 5.9% at the end of next year in 2024, averaging just above 6% for the full calendar year. So the consistent thing I'm seeing here is a lot of people are predicting rates to come down between 5.9 to about 6.5% by the end of the year. And then we've got some folks that are really bullish on lower rates in 2024 and 2025 and others that are not. All the predictions that I'm seeing are coming in that 5 to 6.1, 6.2% range. So what does this mean? Well, let's talk about predictions first and foremost. A lot of times they can be wrong. A lot of times they can be inaccurate, so we don't know what to make of these things until we see the market play out. All that in mind, these folks are very well informed to do this. They study the market every day. So if we do see rates come down at the end of the year, which I tend to agree that we're going to see rates maybe get to 6.5 by the end of the year, maybe 6.25%, and then see that hopefully settle in the high 5s by 2024 because of what the 10-year yield is doing and the spread that we're seeing. It's one of the largest spreads ever between the 10-year yield and 30-year fixed rates. So hopefully that will normalize as we move into next year. And what this means, if you're thinking about selling a home or buying a home, if you're thinking about selling a home, and if you've already got a place to go, and this is really the key here, when rates come down, there will be more competition because all those folks that are feeling locked in right now, that means they probably don't like their home. Locked in is not necessarily a great thing for some people, and there's some folks that want to move, and financially it's just not the right move for them right now, which I get. I tend to agree that you want to let this play out a little bit, and if you're a seller and you've already got the new home lined up, or you got the landing spot lined up, or you're going to go into a rental, maybe you want to move your time frame up to beat all this inventory, because this is almost like a rubber band, where the longer rates stay high, the further that thing gets pulled back, and when it snaps, we're going to see a pop that could be bigger than 2020, 2021, or 2022, because there's all this pent-up demand right now, and the rates are a condition that's stopping people from moving. Now, the flip side is for a buyer. If I'm a buyer right now and I see an opportunity to find a home and buy it with a little less competition and know I'm going to be there long term, I'd recommend pulling the trigger on it, because when rates do come down, you can refinance. That's an option for you. I'd rather be out there with less competition than more competition, because when rates come down, there's going to be more competition. More people are going to jump into the market, just like we saw during that unicorn market of 2020, 2021, and the first half of 2022, where we saw 3% and 4% rates. So I'm imploring a lot of you to think a few moves ahead of the competition. We know there's going to be a lot of competition for housing. Demand is there. If you're looking at the long game, meeting with an agent now, understanding what the predictions are, and at least having a game plan, knowing what's going to be best for you, could be the most beneficial thing you could do, so you don't get caught up in another whirlwind of demand or more competition as more inventory hits the market.